Thanksgiving week in America, and I'm spending it with family, as one should, in a tropical location drinking champagne. Yep, cool. So without further ado, it's, what is it, a Wednesday? Yeah, Wednesday, November 25th, 2015. Let's show the world. Welcome to Forex.Today, our host for today's webinar. Let me remind you that trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please, and I should underline this, right? You could use all. So never risk money you cannot afford to lose. Hello, my name is Wayne. How are ya? I'm the Chief FX Market Strategist for TradersWay.com, an ECN that allows traders access to Forex, but also energies, metals, indices, binary options, and everything good. It's 7:30 in the morning, which means it's approximately London lunch, definitely 2 hours before the U.S. stock market open. We do these sessions here at Forex.Today every Monday through Thursday and at FXStreet.com every Friday. It's a Wednesday, so you are at Forex.Today. If you're new, please register. Right now, we're not forcing you to register. Isn't that nice? So go ahead and register, and it unlocks some hidden gems within the website. You won't know until you register. So go ahead and click register. What you will find, no matter what, is over a dozen trading ideas every single day are posted. Yeah, not robots, real people watching the markets around the clock, around the world. Eastern Europe, Western Europe, Asia, United States. Wow, I don't know what that was about. But can I turn that off? Boy, the thing's just freaking out, huh? I might be having a Windows 10 moment. Yeah, totally. Look, I'm not even doing anything. You guys still here? Oh yeah, of course. We should have done something here. It's funny, I'm not even touching anything, and it's cycling through tabs. Yeah, so tomorrow and Friday, I will not be here. The markets are closed. It's Thanksgiving, and so on and so forth. So I will see you again on Monday. So just so you know. Yeah, just so you know. But did Uncle Wayne, yeah, did Uncle Wayne leave you behind when he went on vacation? No. What happens when I'm sick? I'm still here for you. Yeah. I'm not entirely sure. I might have gone the entire year without a day off. Cool. So anyways, the markets are closed, so then there's no reason to be trading. All right. So let me move to the side. Okay. Yeah. You know what I wish I'd be doing? I'd like to fly out and visit Daniel. That would be fun. Yeah. I want to go to the horse races. I don't know why. I don't know why. Yeah, I'm sure Singapore's lovely. So anyways, then I'll zip over and visit YJ. And then all of a sudden I find myself on a world trip. I have to go visit everybody. That is a thought. Wouldn't that be interesting to do around the world trip? Maybe take 2 weeks to do it, and I just fly one spot to the other, land somewhere, trade Forex for a day and a half with a group of people, and then fly to another one. That'd be great. Put the whole thing on YouTube. Anyways, let's stop dreaming. Let's start working, huh? All right, Euro USD. So once again, and this isn't, for bragging rights. because that doesn't do anybody any good. But we were in a decision-making process. I think it's this move here, right? Or wait, that's only hourly. This move here, I think, on the 4-hour now. We had this retracement. Remember, I was short, and it was retracing over 100 pips. And I asked you guys, should I be freaking out? Should I get out? You know, I had hundreds of pips, and I was losing hundreds of pips from, you know, in opportunity cost. Do I get out? And this is what we talked about in here. I said, well, we never made a higher high, right? It was close. It was as close can be, but still no technical, right? Wait. Yeah, you see charts. Okay. Sir, you look fabulous in the picture. Feeling good, Monty. So anyways, no technical reason to get out, even though, you know, and no fundamental reason to get out either, right? And so it's just interesting to revisit that. We talked about it logically, intelligently. There were probably a few bones in your body screaming and yelling, get out, get out, get out. And it was pretty close to making that decision, but the decision ended up being, let's stay short, and nice. Now we're making low lows now. This is a very low, a very big low. It's really low. Okay, 105.86. You know, like all-time low kind of stuff. And remember, I got knocked out at 90, I think, wasn't it? History. I can't even read that. 194. So we'll see what happens. So I exited yesterday at 94, which is just, you know, what, 5 pips above where we are now. Cool. Okay. I forget what it was. Does anyone remember? Was it this weekly support? I think it might have been a monthly pivot. But anyways. Joma says, would you close? Hang on, I don't quite get the full chat. Let me probably resize this. Would you close off after the... You mean stop trading altogether? Oh, Warren said weekly S2. That makes tons of sense. Thanks, Warren. Yeah, that would have been it then. See, I don't mind getting out Thanksgiving. And I've said it a couple of times. Thanksgiving could be a fabulous time to trade, but it could also be a horrific time to trade. Oh, you okay? So yeah. So I got knocked out yesterday, Joma. I'm on vacation, so I'm not watching the charts 24 hours a day. So I put the stop at a logical level, weekly S2. This is a weekly S1 here, though, so I'm thinking it was a monthly. But anyways, I got I got knocked out for profit. So it was 401 pips. I know, a little embarrassing, but anyways, I got knocked out. Oh, and then this is ECB talk. Everybody knows about that, right? Monthly S2. Yeah, thank you, Benny. Yeah. Yeah, so the ECB is talking about things they might do. Great. You know, it's funny how these things work out, right? Oh, the ECB said this, or oh, the euro dollar fell because of blah, 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 blah. We read it every day, right? Right? Every day you read it in magazines or newspapers or on TV, you hear it, and, you know, the euro did this and the euro did that. Oh, it was because of Draghi. Oh, it was because of this. And I'm just still fascinated after all these years how it just works out as the way it was supposed to do it anyways. Right? Like, you could have not paid attention to any of that and you would have just made a trade and it would have worked out the way you thought. right? This is just a nice little retracement, right? What do you do after a lower low? You fib it, and then where do you sell? Somewhere between the 382 and 618. I mean, it just did what it was supposed to do anyways, right? Right? It's funny, huh? Like a clown. Trying to find my symbol. I thought it was insert. What do they call it? Insert shapes, not symbols. View, toolbars, customize. Let's see, I don't need strategy tester. Don't need meta editor. That symbols was it, but that's going to be, yeah, currency pairs is what they call symbols. Keep that for EA. Data window. Nah, don't do that. Just need my drawing stuff. Kanban. There it is. Boom! Snap! That just happened. Chow! Cool. All right. Won't you? I'm sorry, I missed that. Won't you after boss Wayne? I missed that. Sorry, I was messing with the toolbar. Anyways, we can move over to Pig Dog. Oh, Stevie H caught the 50% pullback. Nice move, man. Good job, Steven. How about a double bottom at a reversal pivot point? Ooh. That could be interesting. When this happens early in the week, and you can define whether Wednesday's early or not. If it was a Tuesday, it'd be an easier decision. But very often, by the end of the week, by Friday, you at least touch the weekly central. But if pound went up from here, because that's all I read here, like I wouldn't short it. Yeah, I just wouldn't short it. I guess I'll just leave it at that. Not there. If you're going to short it, you'd pay attention to this, right? But let's say this goes up. I don't want to buy it, but I'd like to buy British pound. I just wouldn't sell the US dollar. So that makes me want to go look at the beast. What do you think? Should you buy it at the monthly central pivot point, weekly S2? Only if you're a bull. That was a pretty easy trade, guys. What more do you want, right? Holy smokes. And same sort of thing, if you bottom out at the weekly S2 early in the week, by the end of the week, you'll touch the central. Now, what happens when you get to the central? Does it go higher or does it reverse? I don't have any clear stats on that. I haven't observed anything consistent. It could be one or the other. Okay, but if you're a bull, you'd be looking for something in here, some sort of consolidation and breakout. Am I right? So let's call this consolidation. I think that's fair, right? Connect the tops and bottoms. And I think you could have played this. It's not the prettiest thing in the world, but breakouts are often like that. Looks like it was a pretty good apex as well. Right? I'm just going to draw like a Gartley. They don't really have them. Okay. The point I'm trying to make here, I don't know if you can see this. I'll leave it at that. Is that the closer to the apex, which is the pointy part of the triangle, the more reliable the breakout. I'm just trying to get this drawn just to grab the tops and the bottoms here. And so it did kind of go right in that apex. And what creates this is a lack of higher highs and a lack of lower lows. Tighter, 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 and a break. Okay, so the closer to the apex of the triangle, the more reliable the breakout. If it breaks out earlier, it's very often a fake out. Now, this isn't the best example or the best even triangle or wedge or whatever, but it just reminds me of that. Okay, so it did break it. So should you throw this away now? You're like, oh man, I missed it. I'm never going to get an opportunity to buy it. I'd say stop your crying. Okay. So if you're playing a pullback, I mean, it depends on your time frame too. Like if you're even if you're scalping, okay. Let's say you're doing really short-term trading. All you do is you grab these wicks and you drag it across. I mean, I could do that 100 times in a day. So it just goes up, 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 down, down, buy. Okay. Well, Demeter asks, okay, if you're going to the weekly central, how many positions is the maximum that could be added? There's no way for me to be able to answer that. You know, for example, it only comes down to price action. How many times does it pull back? I don't know. How would I know that, right? But you know, so if your target was up here at the 187 again, well, look, Demeter over trading is a function of a couple of things. One, the trading style that you're attempting to do. I mean, if you're swing trading, but you've made 9 trades on the same pair that same day, that's over trading because all of a sudden you think you're swing trading, but you're not. But also, you're not trading based on the price activity that's appearing. You're you know, a lot of traders will overtrade when they're buying these wimpy little cycles. They're not buying true retracements, and you're adding positions based on sort of ghost support and resistance. You know, you're buying when it doesn't dictate to buy, and therefore you're overdoing it. But if you're trading a 5-minute chart, you can get yourself into trades, right? So I do things like really, I'd be more interested in this area. Okay, I'd be interested when the 5-minute becomes oversold, but I might have made my decision already on a 1 hour. Let's say I traded the double bottom. Okay, so what's the price action going to be? It's going to go up to the 55. It's going to come all the way back down. Then we're going to buy it, and it's going to go up to the 200. Okay? At a bare minimum. If you're on your way to the 187, that's 200 pips away. I mean, there's going to be plenty of price action, right? So now you play that out on a 5-minute chart. Okay? The, when you're trading a 5-minute chart in particular, like this is a price action scalp kind of strategy. In this case, we've decided we only want to buy it, and it's 200 pips, so we could do this until the London close, let's say, and then we're going to lose a lot of volume and volatility. So what I want to look for, step number one, I already know I'm already a bull, right? I've already decided that. Fine. Two, I need to buy at support. Okay. So where's support? And I've marked that up. 3, oversold Stokes, like this one here, and like this one here. Okay. So am I at support right now? No. How's my Stokes? Lame. Do I have to wait for my Stokes? No. It's a decision-making process. You can do whatever you want, but that would be most ideal. Okay. Now, how many times is it going to do that in the next 200 pips or in the next 4 hours of trading? Well, I don't know. Okay. And that's the issue of overtrading. It might do that 2, perhaps 3 times. But if you find it 6 or 7 trades, then you're overtrading. If you only do it once, you might be undertrading for this strategy. Okay? Now, I might want to hold this trade and make the full 200 pips. Okay? I could decide to do that. In fact, I could probably go to this cluster up here, right? So what I would do, which would be different than your scalping, is I might wait for it to come down here. I could buy it. Now, you would buy it too, right? Because you're scalping. But I'm a swing trader on this one, and I'm also going to buy it. I might buy it once and then walk away. Okay? And then let's say it makes a higher high. Of course it's going to make a higher high. We bought it, right? And it heads back up. Okay, so let's draw this new one. Okay, great. Everybody's happy. Retraces again. And now what? Well, you've marked this as your buy zone. So what happens here? Okay, Demeter? All right, Demeter buys, because his question was, about over trading. Oops. Okay, you buy, and you've added a second trade, right? And all I do is move my stop, and I'm done for the week. I might hold this for 2 weeks. Because very often I see if this bottoms out and then starts heading higher, next week's going to be bullish too. So I might be on my way, up here. And then am I worried about monthly pivots? Well, not if I buy at the central and I'm expecting a higher high. By the end of November, I'm going to be almost ready for December pivots. And if it closes high, the December pivots are going to be higher. So this might be a 2 to 3 week trade for me. And I never add to it. Or let's say I don't have to add to it. A true swing trade would be my stops at break even, and I'm collecting interest payments, and I'm done. So like that Euro USD trade, I was short 2.5 weeks on that trade, right? Where was it again? Okay. right? I was in that, what, 2.5 weeks? Made 400 pips, made $4,143. That could be better than what people have done working very hard day after day after day, right? You could have worked 8 hours a day and maybe struggled to make 400 pips in 2 weeks, let's say. So there are different strategies. If I can do that again on pound yen, I bet you I'll make more than 400 pips, right? And it's just a swing trade. To me, it's just swing trade. That's all. Would euro pound be even better? Well, that's your decision. Okay. So the best case scenario is when you line up a newly strong currency with a newly weak currency. And I say that because then you got two new trends that are going to take off. And if you are an Elliott wave trader, the expansion wave is going to be the best, most profitable wave. So if you catch the perfect storm, you're going to make a lot of pips. Would euro pound even better? Well, it's only the only question is relative strength. So I think you would be suggesting down. So super weak euro with a strong pound, according to this and the other analysis on the pound dollar. Okay, would it be better? Well, do it and let's find out. Okay, it depends on the fundamentals, it depends on the technicals, and it depends on your bias, right? So I wouldn't say no. Well, Tico, you would plan it out like any other trade. Okay, are you a bull or a bear? If you're a bear, where's the resistance? Okay. Right, so identify a couple levels of resistance and set up a trap. Okay, you might have missed it. Oh yeah, see, look guys, come on. It's like kindergarten stuff, right? So yeah, I don't trade this pair, so it's just me, just my personal style. So if you mark it up, not off the wick, but off the body, gives you a perfect 50% retracement. Can't be a coincidence. It's probably what's going on. Yeah, cool. So if that's what you want, there you go. Is that going to move more than the other ones? I don't know. Time will, time will tell, right? All right. Well, good luck on that weekly central pivot. So yeah, easy peasy lemon squeezy. Again, and if you happen to be a bull, like you want to buy euro and you want to sell British pound, this would be what you were waiting for. So if you were a bear and let's say you got in late and you don't have a ton of pips, should you be worried about a pullback right now? Hell yeah. So if you don't have many pips, the risk is increased, right? Like you could find yourself, let's say, on a 15-minute cycle. This could cycle up 2 hours. And if you don't have many pips, that might be every pip you have before it even thinks about heading back down, right? Because look at where the resistance is. If you're a bear, you're supposed to sell at resistance, right? So let's say you did a lame trade and you sold down here near support. You know it could happen. We know there's, lame traders would sell right here, wouldn't they? So what's going to happen next? It's going to come way up here, knock out all the lame traders, clear them out, and then it's going to drop. Okay? And that'll probably happen 10 o'clock, right around 10 o'clock Eastern time. We'll clear out all these lame traders, loser traders, and then ciao. Okay? Yeah, Kevin says, any advice for small capital beginners? And you're going to think I'm joking, but I'm honestly not joking. You should get a second job and save more money for trading and spend the next 2 years learning technical and fundamental analysis and trading it as much as full-time as you possibly can between your two jobs. You can coordinate that and focus on it like you're going to school and getting an MBA. You say, yeah, I'm getting an MBA. I'm learning about the foreign exchange market. Okay? And after 2 years, you'll be bankrolled and you'll have some serious education. You'll have some serious trading skills and 2 years of trading on a demo. And hopefully you've mastered at least 1 or 2 different trade setups that you're pretty consistently profitable on. And then you start getting real money. Okay? Well, by the way, that's, sort of what I did. I traded a demo account for 2 years before I got in with real money. Kevin says, what should the minimum capital be? It's a function of how much money you need to make. So, all right, let's say you start with 100,000 US dollars. Okay. And the average professional can produce like what, 20 or 30% a year. So you start with 100,000, you would make $30,000 a year. And you're like, Wayne, I don't have 100,000, but I want to make 30,000 a year. Well, then you need some more money, dude. Or leverage up and take on more risk. But we know that risk is a function of eventual loss. But you understand how much money you make is going to be a function of how large your account size is. Are you going to try to double your money every year? Okay, you need a 7% return every month. It could be done. You're going to have to take on leverage. Okay. So you're going to double your money. Well, how much money did you make? Well, again, how much did you start with? So now let's say you have 25,000, but you need to make $25,000 a year. But the one problem with that is at the end of the year, you still have the same amount of money in your trading account, right? Well, Kevin, leverage and lot size are really two different things. I don't really care too much about leverage, but usually though, if you read your agreement with the broker, very often the higher leveraged accounts get things like, lower interest rate payments and stuff like that. But look, it could be 1,000,000 to 1, but what matters is the lot size. Okay? Relative to the account size. Okay? But just, so just do the math, guys. I think doing the math, and I actually did that. A lot of people know here that in my early days, I did a business planning retreat with myself. I actually spent 3 days doing a pro forma cash flow statement, for 2 years of trading, estimated trading, right? And I learned a lot of things, but if you do the math, Okay? How much money do you need to make per year? Start with that number. But also, shouldn't you also be growing your account size? Well, Sebastian says, how much, what kind of lot size do I trade in a $100,000 account? Well, the thing is, when you're an institutional trader trading other people's money, you take much, much smaller positions. So you would be shocked at how small my lot sizes are for my client money. Okay. But then again, I can afford to be in 100 trades. Some of you guys will be maxed out of available margin, with 5 trades. And I could have, I've had over 100 trades at the same time and had 98% of my margin available. Okay. But of course, most of them were profitable too, right? So anyways, start with that, guys. How much money do you need to make? Let's do annual first. Okay. And then how much money would you like to add to your trading account? Because eventually, if your trading account is growing, 2 things can happen. You can keep your lot size the same, even though your account is getting bigger. And what happens is you're actually lowering your risk, which I would suggest. Grow your account size, lower your risk. And eventually, though, your account will get so big and you're still trading, these mini lots. At some point, you're like, now it's silly. So now you start increasing your lot size, but only because your account has got so big. And there, when you do that, and it could take 2 or 3 years, guys, but when you do that, your risk is so low now. You have such solid skills because you've been trading for years. You can grow your account size, and now the money's good, but only because you've earned it. There's no quick way that you should design to do this, right? So the key to success is assets under management. So start by saving money to put into your account, and then keep very low lot sizes, trade for years and develop real skills in multiple market conditions, because market conditions change. I see a lot of traders that come in and they do really well the first year, then the market conditions change and they're not smart enough or educated enough or experienced enough to know that the market's changed, so they never change their behavior. In year 2, they give all the money back because they're like, oh man, well, I did what I did last year and it just didn't work. Well, this isn't last year, dude. Past performance is not indicative of future results. Okay? So grow that account size is the way to do it. Or the other way to do it is jack up your lot size relative to your account size, right? And try to make 300% a year. Okay? How do you think you can consistently do that year after year after year? Well, you better have some real skills to back that up if you said yes. Yeah, but I'm in my first year. I'm just born to trade. Good luck, dude. Right? Good luck, boy. Because I'll tell you what, that's good for me because I'm going to go out, conservative trader with, well over 10 years of trading experience. And on the long run, I'm like a casino, right? I'm going to earn my money. And it's probably from people that are jacking up their leverage and trying to make 300% a year. I'm going to make my money from you. If you're going to throw it away, cool, dude. Throw it away. Because it's going to go to me. Okay, it's a zero-sum game. Do what you got to do, boy. Prove me wrong. No, not commissions. I'm not a broker. TradersWay is a broker. But as a trader, there's always someone on the other side of my trade. And I'm hoping it's someone that's lazy and hasn't done the work and is trying to do it on instinct and going with the flow, and he's fooling around with his new ADX strategy that he bought an ebook on Amazon.com to teach him how to become a billionaire. So boom, throws it down, makes a dumb trade. Those pips go to me, man. Right? It's a zero-sum game. If I'm long, someone's short on my position. Brokers just enter, like TradersWay, for example, they enter your trade into the interbanking system. Okay, there's a process for that, and you just get matched up with somebody else. So if I'm long, someone else is short. So I hope the person short when I'm long is stupid and lazy and lacks discipline. He's trying to go for the flow, throw down some big trades. The stops are super close. His lot sizes are super big. Good, man. I'm gonna win that every time. Right? 100% of the time, it works every time. Because I'm not lazy. I am disciplined. I can have wider stops because my leverage is lower. Therefore, I can get in more trades and I can always be in good trades and so on and so forth, right? So it takes a while. So like going back to, and I need to wrap up here, but going back to that question, one of the first things I did do is have a business planning retreat myself. I spent 2 days developing a spreadsheet to answer all these questions. And let me tell you, there's a paradox. One of the things I discovered is if I paid myself $2,000 a month and put and grew my account by 2,000. Okay. What I'm saying is, if I made 4,000, what if I paid myself 50% and put 50% back into the trading account? Then I 2 years worth of statements saying, well, what if I paid myself $3,000 and put 1,000 into my trading account? But I played with all these scenarios. Well, what if I didn't pay myself anything at all and grew my account size by $4,000 that month? And I did this over and over and over. And actually, I programmed, through macros and stuff, a pretty nice thing where you could just change the variables and the whole spreadsheet would change. And one of the things I learned is the less I pay myself every month, the more money I'm going to make at the end of the year. Jimmy's done something like that, right? Cool. And so what I found is if I, of course, if you paid yourself nothing every month and then gave your big lump sum at the end of the year, obviously something's better than nothing. But if I paid myself 1,000 and grew my account size $3,000 a month, what happens is the account gets bigger and bigger and bigger, and your lot size will change in proportion. So let's say in the first month I'm trading one standard lot, in the second month one standard lot, third month one standard lot, fourth month one standard lot, fifth month my account's grown so big, then I suddenly go to 1.5, right? So 15 mini lots, let's say. And by month 7, I'm doing, 17 mini lots. And by the end of the year, maybe I'm doing almost 3 mini lots because the account size keeps growing and I'm hitting my averages. And so at the end of the year, I made more money in the 12th month than I made in my first 6 months combined. Because, right? Because my account size has grown. And then, so what I ended up finding, so I made more money at the end of the year, but only because my account size grew, not because I was making more pips. Okay. And in fact, what I did is I tweaked it. So even though my account size was growing, the actual risk, the percentage, right? The value of a pip lost relative to the actual account size, that risk, I actually tweaked it so it got smaller. So at the end of, let's say, my first 3 years, my account size was pretty big. I was making decent money, but over the course of 3 years, I actually lowered my risk. So my advice to you is treat it like an MBA. Tell yourself you're going to have at least 2 or 3 lean years where you're not even going to try to make money. What you're going to try to do is grow your account size and get 3 years of very serious trading experience under your belt. Okay, that's what I would do. And then what happens is at the end of year three or year four, shoot, you're making pretty good money. But what percentage of traders, learn Forex and then trade profitably because they're so focused, conservative, and so disciplined over the course of 3 or 4 years? What percentage actually do it? Well, it's very low. Well, it's because most people don't even try. Right? And then the second one is actually getting it right. Some people say 80% of the game is just showing up. And no, I think 80% of the game is not sucking. So staying focused and disciplined and all that kind of stuff is very, very important. Yeah, Kareem, no cohibas without the blood, sweat, and tears for years, right? But also there's another interesting part of that. What a lot of people do is they raise their lot size too quickly, and the trades are becoming too big too fast, and they start making emotional decisions, right? Like big money, right? Every trade is a big trade. If this one hits, it's a huge amount of money. But if it loses, oh my God, it's so much money. Just not ready. You're in panic mode all the time. If you're sweating bullets over a trade, you're not doing it right. I don't know any other way of saying it, right? If you're sweating bullets because it's such a big trade, you're not trading properly. You're a degenerate gambler and you will lose. So you need to stop at all costs, like full stop. You need to stop that behavior. You're denying yourself your destiny of success. So how long do you want to deny it? Are you just delaying it? Like, what are you doing? What's your game plan, son? Right? Got to put it into action. Stay focused, stay disciplined, have a 3-year plan. Like, actually write out a business plan. I had a mission statement, an operational direction statement. I had multiple key result areas with action items and dates. It was specific, measurable, attainable, realistic, and timely. I had 2 years of pro forma cash flow statements. I knew exactly what level of leverage and risk I was going to take. I knew what my goals were per day, per week. I could tell you what I was going to do on the 27th week and on the 54th week. I knew what my account size should be and what my lot size should be and what my income will be and how much my account would grow. I mean, I was prepared. Okay, I didn't just show up and started winging it because, put yourself in my shoes, I don't know, 12, 13 years ago when I was, getting into Forex, there was no educational material whatsoever. And there were tons of scumbags and scam artists. So I quickly realized I'm on my own. So I had to be crazy, ridiculous, or like that video I did, I had to have sickening work ethic. Sickening work ethic. But here I am. Boom, champion, right? Living in the Hall of Fame. But I'm a survivor. Yeah, it's a tough gig, man, but you got to take it that serious. So, yeah, to whoever asked the question, treat it like an MBA. Realize that you're going to invest a lot of the money that you already have. Then you're going to take a second job and you're going to save all that money. And it all goes into a trading account. And while you do your day job and while you do your weekend and evening job and participate in your family life and all that kind of stuff, you're also on top of that going to trade as focused and disciplined as possible with real strategies and learning fundamentals and learning technicals and learning risk management, all these different things. And you're like, oh my God, Wayne, that's going to be like 18 hours a day. Uh-huh. And then you're going to work weekends. Uh-huh. And then when you go on vacation, you still work. But who do you know is like that? Do you know anybody like that works when he's sick, that works when he's on vacation, that works nights, that works weekends? Yeah, but you know what? I love it. I love it. It's worth it. What else are you going to do? Oh, and by the way, on top of all that, I go to Harvard. Like, come on, right? It can be done. Just fall in love. Just let go of the angst. Fall in love. Follow your path. Stop delaying your destiny, right? Embrace it. Just say, I'm going to get rich 7 years from now. And be okay with that. But at least put yourself on a path, because if you knew, look, you're going to have to work like a dirty dog for 7 years, but if you don't die, if you don't quit, if you can just survive, there'll be huge rewards and your life will change in every single way and in all positive ways. Would you do it? Most people wouldn't. They're like, nah, I'd rather have my dead end job and then go home, sit on the couch, put food on my face, and watch successful people on TV do interesting things like sing and win singing contests and dance and win dancing contests. All right, good. Or fight for it. You're like, I'm telling you, the 7 year plan. Are you willing to work your butt off for 7 years? Well, put the plan together and just know where you're going to be in year 5 and just be excited about it. So just to wrap up here, I did read a book several years ago written by an Aikido master. And he said, you should enjoy the plateaus, right? You shouldn't just try to get from belt to belt to belt to belt to belt. And, yeah, I'm a black belt. And you just quickly burn through everything. And you're so impatient. Oh, when's the next belt? What do I got to do for the next belt? He said, to be a true master, you should enjoy the plateaus, time in between. If you're not enjoying it, if you don't love coming into, like, let's say, if you don't love stepping on the mats, if you don't love the feel of the mats under your feet and the way that you balance your body, right, then you're really never going to be a master. You might get a black belt, but you'll never truly be a master. So you need to enjoy the plateau. That's why I say, look, if you have a 7 year plan, plan it out. Do what I did. Spend days and days and days planning this out to as detailed as you possibly can. I mean, mission statement, operational direction statement. I did SWOT analysis, all these different things. And then at least you know where you are and you don't feel like you're walking, hopelessly in endless night. You just kind of know where you are. And man, I'm in year 3. I'm starting to develop some really good trading skills. I'm starting to become very profitable and my account size is growing. How nice. But you're still not paying yourself much money, if at all any. Maybe some just to help on the bills, but maybe 70% of your profits go back into your trading account. How exciting, because you're just a few years away from huge success. At the rate that account size is growing, boom. And then maybe after 5 or 6 or 7 years of experience, you're also qualified to start trading other people's money and your assets under management increase more. That's the secret to success. Sickening work ethic, years of hardcore skills, and in growing assets under management, while at the same time lowering your risk. Got to go. Got to jump, babes, for being on my team. Have a nice Thanksgiving if you're American. And I'll see you on Monday. Remember, the markets get closed and all these funky things start happening Thursday and Friday. So I'll see you on Monday. So again, peace on earth. May the pips be with you. May your profits be above average. And thanks for being a client of TradersWay. Cheers.